next few weeks, I'm going to be taking us on a series I've titled the 2026 Property Tax Playbook. Of course, it can be applied to subsequent years. For clarity purposes, I'm not a property lawyer, neither am I a tax expert. I'm simply a real estate advisor, a business analyst, and an author of a book titled A Comprehensive Guide to Understanding the Different Type of Land Titles Recognized in Lagos. Now, the purpose of this series is to understand how policies, especially how tax policies, affect property acquisition, investment decision, and wealth preservation. This series is all about me sharing my perspective from my findings about how the new property tax law will affect property acquisition, and this is in a bid to help advise my clients better. With that said, let's dive right in. Do you get taxed because you inherited a property? The answer is no. Before the new tax law, you don't get taxed just because you inherited a property, and that have not changed even with the new tax law. If, for example, your father gives you a home worth 150 million naira, government will not charge you just because that property was passed down to you. However, what you now decide to do with that property subsequently will determine if it will be taxed or not. So you might ask, when does tax now come in? Tax only comes into the picture when you decide to sell the property. Now, if the property is your primary residence, by law, that property is tax exempted. So it means that the government taxes it as tax exempted. You don't need to pay tax when you sell your primary residence. However, if you inherit a property and you turn it into a commercial asset, when you sell it, yes, it is taxable. So let me walk you through a simple breakdown just for you to have a full understanding of what I mean. Your father gave you a property worth 150 million. Few years down the line, you decide to sell that property for 300 million. Now, the government will not tax you based on this inheritance. They will only tax you based on the profit you made. The profit you made is 300 minus 150 million, which is 150 million. So this is your gain on the property. Now, under the old tax law, you'll be taxed 10% of this. But under the new tax law, you will be paying based on your personal income bracket, which can go up to 25%. So it's no longer at a fixed rate of 10% for everyone. Under the new tax law, it is based on your personal income bracket, which goes up to 25%. Third thing you must understand, how does government determine the value of an inherited property? This is very important because when you inherit a property, the asset is usually assigned a market value at the time that you inherited that property. Now, this value is what we refer to as cost base. Your cost base is essentially the starting value used to calculate your profits when you sell your property in the future. So if your father bought the property 20 million 20 years ago, when you receive the property, it is 150 million. This becomes the reference point for your tax calculation. This becomes your cost base. Government will not start charging you tax from 20 years ago when your father bought it. They will only start charging you tax from when you received it as an inheritance, and that is when you want to sell the property, not when you inherited it. Now, this is why it is very important to have proper documentation that backs up the value of the property when you inherited it, because without proper documentation, you cannot prove that that was the value of the property when you inherited it, and that might incur you paying more tax when you want to sell. So proper documentation is very important. So you might ask, what happens if I never sell the property? Then you won't be paying tax. Tax only applies when you eventually sell the property. As we bring this to a close, it is important that you do not make the mistake of not properly documenting your inherited property. Immediately the property is transferred to you, do a professional valuation and document the value when you received it, so that you don't have tax complications in the future when you eventually try to sell or do something with the property. With that said, if you found this helpful, do well to subscribe to my YouTube channel. I will be having more series, just like I said at the beginning of this video, so turn on your post notifications so you are the first to see further topics on tax and how this tax laws affect your property investment journey. My name is Joanne. See you on the next video.